All right, in this lesson, we're going to review something that we actually talked about in the last lesson. That's periodic versus perpetual. And the reason why we're doing that is because as we talk about FIFO, LIFO, and weighted average, we can actually take approach of either using periodic in conjunction with FIFO, LIFO, weighted average, or perpetual in conjunction with FIFO, LIFO, weighted average. And so if we understand periodic and perpetual, we kind of get a better understanding that the way that we're going to be doing it here for the rest of the section, we're only going to concentrate on one of these two flavors, but if we use the other one, then we may get a different answer. So we're trying to expose you to this now and review it now. That way you know there's actually two different ways that we can do it in conjunction with FIFO, LIFO, and weighted average. So kind of an overview before we really talk about FIFO, LIFO, weighted average. We want to make sure that you are definitely understanding periodic and perpetual as we go into those costing methods. Now, the idea of periodic and perpetual has to do with the understanding that has to do with the understanding of when do we transfer costs from inventory to cost of goods sold. Do we do this once a year? Do we do it at the end of each period, or do we do it every time we make a sale? And so that's what periodic or perpetual gives us, is an understanding of when we're actually going to move it, okay? Whereas FIFO, LIFO, weighted average is how much are we going to move from inventory to cost of goods sold. Now, companies can choose either one, periodic or perpetual. It's okay for them to do it so that they can understand their timing of when they're going to move it. Now, they shouldn't change from period to period. So if they use periodic this year, they shouldn't use perpetual next year and then periodic the following year. They need to be consistent. They need to stay the same. And that goes for the FIFO, LIFO, weighted average, and specific ID as well. Periodic is the idea that we don't update any inventory costs until the end of the period. So when we talk about periodic means that we periodically update our inventory to cost of goods sold. So when we transfer costs from inventory to cost of goods sold, we do it periodically, usually at the end of the period or at the end of the year. Now, instead of two entries when we sell a good to a customer, we only make one entry, and that entry is the sale and not the cost. We'll do the cost at the end of the period or at the end of the year. Now, when we use periodic, we follow the same inventory costing method in the next few lessons, just at the end of the period instead of when we make a sale. Now, with perpetual is the idea that we update inventory costs immediately rather than waiting until the end of the period. When we sell a good, we book two entries, one for the sale and one for the cost. So understanding that we have a little bit more work if we're going to use the perpetual inventory system. Now, when we do use the perpetual inventory system, we will follow the same costing methods in the next few lessons every time we make a sale. So over the next few lessons, we're going to show you how we calculate the numbers. We will do that every time we make a sale, which gets a little bit, a lot of work, but that's what perpetual does, and it does give us better information at the end of the day. Now, we're first going to learn FIFO, LIFO, and weighted average from a periodic standpoint first, and then if we have time, we will actually go back and look at perpetual. But just know that we are actually only going to be responsible for periodic right now, and if we get to perpetual, we will, and that will be at the very end of this section. If not, it's okay if you don't know perpetual. Periodic is the most important part in this section. So that is periodic versus perpetual. So understand that as we talk about FIFO, LIFO, weighted average, we actually can add on to it periodic or perpetual. Specifically, we're going to be looking at it from a periodic standpoint, but if we did look at it from a perpetual standpoint, it may give us different numbers because we're doing it every so often versus waiting until the end of the year to have all of our books complete and then doing the cost flow analysis associated with that. So that is a look at perpetual and periodic. Wanted just to get that up front to help you understand the difference. And as you start to see the title, it's going to say periodic or perpetual, and so don't want you to get too confused when you see those two words. All right, so hope you enjoyed this lesson. We'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or clicking the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.